Let's start with the first one. And the first one on this is sales. And the reason that this is first is this is the most important. This is also the easiest, but this is the one where if nothing else, if you don't do anything else today, you need to do this one. What this goes back to is if you look at your financials and you see in your sales categories, check deposits, credit card clearing, outside financing, cash, check, then you are probably doing this cash basis. Even if you just see one big sales category that just says sales or says total deposits, you are not doing this correctly. I want my sales to be split out just like I see in my shop management software. Parts, labor, shop supplies, sublet, tires, etc. And within reason, those sales should match exactly my shop management software. Now, you might be thinking to yourself, well, Hunt, they don't match, right? Because I don't always get paid this month. I get paid next month. How am I going to be able to adjust this and make sure that all of this stuff jives and is correct? We have a shop management software. This is how we're able to do this. Now, how do you actually implement this? How do you switch from a cash basis to accrual for sales? So there's a number of different ways that you can do this. You can use an integration like back office, accounting link. That will actually dump all of the sales over there. And if you post this stuff to accounts receivable, it's all going to come over and it's going to match up exactly. Now, do you need integration in order to do accrual-based accounting? No, you do not. And even a lot of my clients that do ultimately end up doing integration, we show them how to do this stuff manually behind the scenes. And if you want to do this manually, there's resources out there. There is videos that we've done on this. I don't want to kind of get too into the weeds on this because I think it's a little bit confusing to explain just verbally on here. But the general idea is that you can do a daily sales entry. What the daily sales entry looks like is it's reconciling the sales to the deposits. If we're looking at this and our daily sales today was $5,000, but we only received $4,700 in deposits, we're going to have to figure out where the difference is. The general idea on it is we're going to credit the sales, right? So we have parts, labor, shop supplies, sublet sales. We also probably have some sales tax, so that's going to go in there as well. We're going to look over there and we see we have all these sales and all these taxes. If we got paid the exact same amount in cash, we don't even need an entry. Those are going to match and those are going to jive. But generally what you're going to see is sales are either higher than your deposits, and we know that that difference is going to go to accounts receivable and increase it, or our deposits are going to be higher than our sales, which means someone pays us out of accounts receivable and we're going to reduce it. So in a perfect world, your sales match to the penny in your QuickBooks compared to your shop management software, and also your accounts receivable does as well too.